I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a best-selling author who wrote this book years ago. This is my personal copy. This has all been reprinted. It's in the last year. This is the guide to investing in gold and silver. Of course, there's a spoiler alert. Mike Maloney. Mike Maloney, best-selling author, expert in gold and silver of goldsilver.com. Let's bring him on. Mike Maloney, thank you for joining us today on USAWatchdog.com.
It's always a pleasure to be on your show, Greg.
The Hidden Secrets of Money has been a series that you've had on. I think number 4 had 5 million views, and you've had 5 and 6 and 7, and 1, 2, 3, 4, 5, 6. Now you're on 7, and what you say in 7 is pretty alarming. I mean, you say our day of reckoning is here. We had the crash in 2000, and we had another one in 2008, and you're saying this one that's coming is going to be the granddaddy of all. Could you explain, please?
Yes. People should watch episode 6 before watching episode 7 because it sets up why this is going to be a deflationary crash. But in episode 7, one of the things that we do is explain velocity of currency. What they usually call that velocity of money. In episode 1, you find out that no country on the planet uses money. We're all using currency. And there is a difference. Watch episode 1 to see what the difference is between money and currency. But basically, this is psychological, and I like to say it's psychological because things run in waves and cycles. They're very logical, and they're logical because it reflects on their psychology. So psychological and psychological. In my book, which was written from 2005 to 2007, I said that we were going through a roller coaster crash. I wrote that there would be there was going to be a global economic crisis, and there would be a threat of deflation, and we had that. And I said that Ben Bernanke would overreact and do a helicopter drop of currency, and we had that. And I said that that would inflate or reflate the stock markets, and we've had big inflation of all the asset markets of real estate. We're back into a real estate bubble, a stock market bubble, but now we're also in the end stages of a 30-year-old bond bull market. So we're in a bond bubble. The world is awash in debt. So the first crash in 2000 was a stock market crash. In 2007 and 2008, we had a stock market and real estate crash, an implosion. In 2016 or 2017, we're going to be having stocks, real estate, and bonds all crashing because this is sort of a perfect convergence of not only being, Ben Bernanke creating all that base currency. There used to be $0.8 trillion worth of base currency. Now there's $4 trillion. So he created an extra 400% on top of the original 2008 base currency supply. The Fed calls it base money. It's not money. Now, I said that this crash is going to be deflationary. It's going to be true deflation, and that is because of the psychology behind it. Prices are determined by the quantity of currency times the velocity of that currency. And velocity is how many times each unit of currency changes hands over the period of a year is usually the way they measure it. And that's determined by how people feel. That's the psychology. If people are scared, they don't go out to dinner, they don't buy a new SUV, they don't borrow, they don't take out an equity extraction out of their home and go and spend that currency on SUVs and flat screen TVs and remodeling the kitchen. They pay down debt and they save currency. And that's deflationary. And if you watch episode 4 of Hidden Secrets of Money, you'll see that our monetary system cannot withstand deflation. If you go into deflation, it's possible for the whole currency supply to go into a deflationary implosion because every dollar that exists is borrowed into existence. And when we borrowed it into existence, whether it's through the Federal Reserve creating base currency by buying a treasury bond from the government, and the treasury bond says, loan me $1 trillion today and I promise I'll pay you back $2 trillion over a 30-year period. Well, that second trillion doesn't exist yet. When the Fed writes a check to buy that bond, the dollars are created. That's where base currency comes from. The Fed just writes basically counterfeit checks, bogus checks. Currency appears, but it's owed back all the principal plus interest. The interest does not exist yet. You take that base currency, deposit some of it in the bank, and the banks get to use that with fractional reserve lending, and they create currency when you sign a mortgage, a auto loan, or a credit card receipt. You promise the bank, they create currency and loan it to you, and you promise to pay it back plus interest, but you didn't borrow the currency to pay the interest back. Neither did the government when it borrowed currency from the Fed, and the Fed created it. So every dollar is owed back plus interest. The currency to pay the interest does not exist yet. And so as all of humanity, the entire globe, we always have to go deeper and deeper and deeper into debt to keep this Ponzi scheme of a monetary system that we've got going. If we don't, it implodes. Well, this next crash is going to be devastating because it's not just stocks like 2000 or stocks and real estate like 2008. It's stocks, real estate, and bonds. So this is going to be the worst crash of all. It's going to scare the hell out of the baby boomers, which still had years, they had recovery time left. If, in 2000, their IRAs and their 401ks shrank. And then they recovered back to where they were in 2000 by 2007. And then they shrank again in 2008 and 9, even worse. Now we've got the stock market at all-time highs. Actually, inflation adjusted, it's down 10% from the year 2000. We've had a lost 16 years here. But with this crash, when they see their IRAs and 401ks collapse again, and they've got to retire, and they don't have another decade to recover, it's going to scare the hell out of them. They're going to stop borrowing and spending. They're going to start paying down debt. Velocity of currency will slow. The Fed and all of the rest of the world's central banks will start printing currency like crazy to try and get out of that deflation. But no matter how much they print, the public is just going to save it up and pay down debt with it, all deflationary. So they're going to print until deflation starts to give way, because they know that there's a certain amount of savings that will make people comfortable to feel like they can retire. But by the time the Fed reaches that point, there's going to be so much base currency in the system that we could run into a hyperinflation or huge inflation. And either way, gold and silver will take off like a rocket. But it's worth watching episode 5 of Hidden Secrets of Money, episode 6, and then episode 7 if you want to see the future. I was very accurate in predicting the crash of '08 and the consequences of it, and I believe that the rest of my predictions that didn't come true just have not come true yet. They're about to. And so that's what episode 7, the USA's Day of Reckoning, is all about.
And this is going to wipe some people out, Mike Maloney.
Yes.
I mean, this is going to be, people are going to wake up one day and go, what do you mean I don't have a pension? Well, what happened to my 401k? What? You put my 401k in treasury bonds? Bail in? What's that? I mean, aren't all those things going to happen?
Yes, absolutely. And it's going to be devastating for most people. Everybody needs to study this as much as they can and determine their own course of action, what they think is going to get them through this storm best, and hopefully even capitalize on it. I believe that there's going to be an enormous wealth transfer, and it's up to every individual to determine whether that wealth is transferred away from them or toward them. This time, though, it's going to be, sometimes the wealth transfer is going from 100 people to 1 or 1,000 people to 1. This time it's going to be hundreds of thousands. There's going to be very few big winners and a whole lot of losers. And the problem is that changes the political landscape of the country. When Hitler came to power, he did so they had gone through the Weimar hyperinflation. And during the final week of that Weimar hyperinflation, when the middle class had been erased from the country, there was no more middle class. He was unknown. He pointed guns at the entrance to the Burgerbrau Keller, where there was a political speech of about 3,000 people in the Burgerbrau Keller, a big beer hall. There was a political speech going on. He pointed guns so nobody could leave, machine guns. He took the stage at gunpoint and to this literally captive audience gave a speech that would change the world. And the next day, those people from the Burgerbrau Keller followed him to try and do a coup and take over the government. He was arrested and tried, and the judges were sympathetic to his beliefs and let him go on for hours on end with these big diatribes that were carried in every newspaper in Germany. He had the ear of the nation, and he was talking to a scared, desperate population, and he was able to play on those fears. And then things recovered. He became sort of a memory. People weren't paying any attention to him. The Nazi Party was less than 2% of Germany. And then the Great Depression came, and he was the first politician to campaign by aircraft hitting multiple cities in a day. And he was able to scare them again into him eventually getting power. So there's great political change when there's great political strife. And we're about to enter one of these times again. You know, every 4.5 years, the U.S., since the beginning of the U.S. to today, on the average, every 4.5 years, we have a recession. We're 7 some years into this expansion, this economic expansion. It's the weakest economic recovery on record. And it was bought and paid for with $3.2 trillion of base currency. And it bought us the weakest economic recovery on record, like I said. But there's waves and cycles, and there's always recessions. And this one, we're now in, this is the 3rd longest economic expansion in history. It's about to become the 2nd longest economic expansion in history. So the odds are that very, very shortly here, we're going to be in a recession. I believe we're actually already in one. Recessions are trailing indicators. They require 2 consecutive quarters of bad economic news for them to declare that we're in a recession. But when they say that, it means that we entered the recession 6 months before. Looking at the Fed's, I love to haunt the Fed's website and generate charts and see whether, what the future is going to bring. And I believe that we're already in that recession. I think you'll see them announce it in either this quarter or the next. And the stock markets are not going to take the news lightly. I believe that we're here, that this is the turning point, and we're going to see the second half. We've been in a 7-year eye of a hurricane. This is basically the second half of the 2008 crisis, and it's going to be a lot worse because of how much central banks have manipulated the free market to get us out of the crisis of 2008. And right now, the ECB, the European Central Bank, and the BOJ, the Bank of Japan, are creating more currency than was created in QE1 to get us out of the crisis of 2008. So Japan and the Eurozone are creating currency at emergency levels, and they've got negative interest rates. That says that we're in a crisis right now. This is going to be bad.
You had said to me one time that actually in the pre-interview you said that a dollar used to be 1/20th of an ounce of gold, and I thought this was very instructive. And now it's 1/1200th of an ounce of gold. So over the long term, it's a great value. But what happens if there is war? This thing in Syria heats up. Russia says they have a no-fly zone going on now. The United States has threatened that as well. I mean, who knows what's going to happen? But what happens if we get into a hot war? Isn't gold going to take a moonshot?
Yes, it's a very geopolitically sensitive metal. It's economically sensitive. It's geopolitically sensitive. It's real money. We use currency on this planet. We don't use money currently as a medium of exchange. Gold is real money, and it stores its value throughout the centuries. Silver is also real money. It's the money of the common man. Silver's been used in more transactions than any other medium of exchange throughout history. I expect that if we get into any major war, you're going to see gold and silver take a moonshot. And one of the things that Doug Casey and a few other commentators have said is that this will unfold very slowly until the day that it doesn't, and then it's going to happen very fast. And I believe that that's one of the things that we're in for. You're going to see one day gold just take off and not look back, and silver's going with it. And silver will most likely outperform gold by quite a factor.
You think that we'll get to this 1900, 2000 level in gold in short order, and it will go much higher in the around $50 silver per previous high back in 10 and 11, 12, somewhere in that 10, 11. You think we'll get to that in short order when things start going bad?
If it's a war scenario, yes, that would be very short order. If it's this deflationary crash, what we could see is gold and silver get dragged down for a little while, just like in the crash of '08, which happened in August. Gold went down until October or November, and then turned around and started its shot from 700 to over 1900. And the markets, though, kept on crashing all the way until March the following year. So gold took a short-term dip, turned around and took off like a rocket, and the markets kept on crashing and crashing and crashing, and then finally recovered after they had created all of this currency and done all of these different manipulations to try and save a bunch of banks that are now basically the equivalent of Japan's zombie banks. They should have been, the debt should have been cleared off of the balance sheets. The economy does not, when it's a manipulated recovery, you get these weak recoveries because the free market did not get a chance to clear out the excesses and the debt that was in the system that was misallocated resources.
And if we do get war, could we end up getting a crash? Boom, war, boom, crash, just like that. I mean, this could go into hyperdrive. I mean, all bets are off when we get war.
Yes, that's the reason I've been, my business, goldsilver.com, is one thing, and it helps support creating things like Hidden Secrets of Money, because my passion is actually the teaching and the spreading of information. But my personal investments are something very separate from those things. And I just made a large purchase because we're down on some support lines. I make monthly purchases, but I make a large purchase once in a while when things take a big dip. And I have been expecting for the past couple of months, I've been watching the Commitment of Traders reports and expecting silver to drop down into the 17s. And so when it got here, I made a large purchase, but I still kept some cash aside because if it goes deeper than this, I want to be able to buy even more.
That is the voice of an investor right there, to buy even more. I just wanted to kind of bring up one other thing. I know you sell gold and silver at goldsilver.com. You're a seller of physical metal. If we start seeing $100 day limit up days in gold and limit up days in silver, I mean, you're not going to rush right out and start selling your inventory. You're going to hold your inventory, are you not? Isn't that what everybody's going to do if we start seeing big moves?
I've developed what I call a dashboard. I've got 28 different indicators that I'm following to try and determine. I'm trying to build a bunch of indicators that will keep emotion from driving whether I'm buying or selling. So far, we've just been in a buy mode. From the year 2000 to today, I've been buying. And I buy every month, and I didn't care when it was up when gold was up in $1,700 area, and I made purchases. Now it's down in the $1,200 area. When I make a purchase now, I just get a lot more for my currency. But there is going to come a day where I sell. Now there's some people out there that will tell you that they can catch the top of this market, and it's a bunch of baloney. Nobody's got a perfect crystal ball. But with a bunch of indicators that start agreeing, I believe that I can catch around the top of the market and sort of average out. And so I believe that day is coming. I don't expect it here within this year or next. But you're going to see a moonshot here pretty soon. And there will come a day where you want to sell your gold and go into cash flow real estate or high dividend yield stocks or something that generates income. I'm not a big fan of gold and silver. They're just lumps of metal. But right now, with interest rates negative in much of the world, they actually have a positive, they're a more positive carry cost than bonds and other safe haven investments. So gold and silver, I still think they're both down at bargain level prices compared to the size of the global currency supply, which is getting larger and larger. One thing, gold and silver come with a central bank guarantee, because the world's central banks guarantee us, the design of the monetary system guarantees us that they will always create more currency year after year after year. It will never stop, and there's a finite amount of gold and silver.
I can tell the sun is setting in beautiful Puerto Rico. I really appreciate you coming on. This is Mike Maloney. He has had this book. This is my personal copy. This is no longer in print, but the other one is in copy. Best-selling author. The updated version of this book, also Hidden Secrets of Money. You can find it all on goldsilver.com. Mike Maloney, thanks for joining us today on USAWatchdog.com.
Thanks for having me, Greg.